I basically called up the head of investment banking, pitched to him on the phone, and he basically said, "Okay, great. You seem quite confident, so we'll come in for some interviews." Went through 3 rounds of interviews, modeling, testing, case study, and they let me let me join.
Hello and welcome back to the Bizcast. In today's episode, we had a very interesting conversation with Raj Padam, a current director at Stifel. Raj graduated from the University of Leeds with a bachelor's in economics and the following year joined Stifel as an intern. However, Raj's approach to joining the company was slightly unconventional, cold calling the head of UK investment banking and subsequently landing the role. Raj has gone on to have an incredibly successful career at the firm and now sits within real estate and investment funds investment banking as a director. But yeah, so I think we'll start out with Leeds. So you studied economics at Leeds. Was that sort of a conscious decision? Did you sort of know that you were thinking of going into something finance related for university?
Uh,
You interested in
uh,
that?
yeah, good question. So it was probably my worst subject at A level. So I thought, well, why not do this? It's super interesting. Uh, the thing about economics is quite cool is you can argue from both sides. So that's quite a helpful skill. And then naturally, economics, you can just kind of do anything. So I kind of knew I wanted to do something in finance or business.
Yep.
I just kind of didn't know what that was, but I did a insight week over at State Street, the asset manager.
Yep.
Did that for a week, loved it, and then knew I wanted to do something in markets after straight after that.
Very good. And so it sounds like you sort of potentially started out more interested in the market side of things.
Yeah,
And then I noticed you did an internship in your second year of university. Was that at
yeah.
a corporate finance boutique? Can you maybe tell me a little bit about that?
Yeah, so that was the Sheffield boutique M&A house. I thought I'd just tide the summer with doing something. Um, I basically called them and emailed them up. I said, "Would you consider taking an intern?" And they said, "Well, we've never done it before." So, well, there's always a first for it. So
Yes.
they opened the door for me kindly and let me hang for the summer. Uh, but yeah, it was cool. Working in the regions is very different to working in London. It's a
Yes.
very small, tight-knit network. So you'd meet managing partners of PE funds in Leeds and Manchester, who I still know to this day because of
Really?
that. Yeah,
Wow.
yeah, yeah. It's very, very, very different.
Always think starting out somewhere small is where you are going to get the best exposure. And I suppose your sort of experience of getting to speak to managing partners at PE funds is sort of very much testament to that. So I'm assuming that sort of is what very much got you into the kind of corporate finance side of things. So from then on, did you sort of know that was where you wanted to target your applications?
Yeah, I think so. It was the thing I liked was you could do lots of different things in corporate finance. You're not just, I don't know, if you're doing asset management, for example, your skill is so niche. If
Yeah.
you work as an investment banker, you learn to sell, you learn the law, you learn financial modeling, you understand the commercial aspects of business. It's a whole plethora of different skills,
Yes.
which I think a lot of careers don't give you. So you could very easily stick an investment banker in most places and they'll probably be okay as long as they're willing to learn.
Yeah. Yeah, no, I suppose that's very clear. So it's definitely a kind of dynamic industry to be part of. Um, and then so after graduating Leeds, so you did an off
Hmm.
cycle at Blue Box. How did that
Yeah.
sort of come about? Was that a slightly more formal process?
Funny enough, I didn't have any internships set up post third year or grad jobs, so I moved down to London with my mate without a job,
Okay.
uh, which is always a great idea. But it does focus the mind if you're in London without a job. So
Yes.
I was pressing pretty hard to get a job for about a month. Managed to land one at Blue Box, and then that got my foot in the door to learning a bit about M&A and it was James Caan's boutique back in the day. So
Yes,
I
of
got a
course.
lot of exposure um across the board there. So yeah, it was really really fun, but I got a bit lucky in that sense of they also took a chance on me as well.
And then, so you did the internship at Blue Box shortly after finishing university, and then you
Hmm.
started at Stifel. Am I right in thinking as an intern? So was it you leveraged the experience at Blue Box you think helped with you obtaining that?
Yeah, I think both internships helped me
Yeah.
massively, and I think that's something I think is underappreciated is getting one the experience, but two understanding whether you actually like this or want to do this.
Yes.
I hate it when prospective candidate walks into a room and says, "I'm passionate about investment banking," and I'm just sat there going, "Why? Have you
Yeah,
actually ever done this job?"
yeah.
Um, so yeah, that did help me to go back onto the topic. Um, I basically called up the head of investment banking, pitched to him on the phone, and he basically said, "Okay, great, you seem quite confident, so we'll come in for some interviews."
Oh
Uh,
wow.
went through three, went through 3 rounds of interviews, modeling test and case study, and they let me let me join. But they basically didn't have any graduate or internship programs back then. They would hire ACAs into associate positions. So I sort of saw a little gap there of an American bank coming into the UK wanting to grow. And I sort of thought, well, there's no junior people. I have no competition really. So why not give this a go?
Wow, I was gonna say I've never, cause especially because Stifel's obviously a company with offices all around the world,
Yeah,
massive bank, kind of one of the biggest mid markets out there. So that's really, really interesting to kind of hear that you kind of obtain that, because obviously you hear more about obtaining, internships via cold calling for slightly smaller boutiques. You must have been able to show them the initiative, and that was obviously what they're after. And especially you said because they
yeah.
didn't have many entry level positions. I'm assuming there wouldn't maybe be as much training, so they wanted someone who was self-sufficient, potentially.
Yeah, there was no trading.
No.
There was no trading, definitely self-sufficient.
Yeah.
Um, and back then there must have been 30 bankers in London, so it was pretty small.
Yeah.
But all the US mid-markets were just coming to London around that time, whether it was a IW Baird, William Blair, um, Stevens, etc. So I sort of right place, right time, and I noticed something of a gap, which helped me massively.
Yeah, really, really cool. Then hopefully that actually inspires some of our members. So it sounds like, interesting enough, you saw a bit of a gap there. That's maybe what
Yeah.
initially prompted your application. Would you say there was anything else that attracted you to the bank? Maybe when interviewing, things that you heard, or when you're researching, that made it sort of clear this was some place you wanted to be?
Yeah, so I'll put it back down to sort of the beginning of I knew this bank was quite small, huge ambitions to grow.
Yeah.
I think putting yourself in that position is a good thing,
Yes.
So joining a good growing bank is helpful. And what that means is that also creates a kind of culture which is a bit different. And what I
Yeah.
mean by that is because I'm so glad I got to a mid market and didn't go to a bulge bracket, if I'm completely honest.
Yes.
Um, So it's really one, it's you work with such nice people, and that's not normal in banking. And I'm very happy to talk to anyone what it's like to go work with other people at different banks, whether it's elite boutiques or bulge brackets. The culture is just not the same as a mid market. It's just
Yes.
completely different. I can't understate how important it is working with good and nice people who who are you know who actually do care about you. And again, that's just not normal in banking. So yeah, great people. It's super entrepreneurial. I was quite young and ambitious, so I got a lot of responsibility super early in my career. I think I was running my first equity deal when I was 24 or something,
Wow.
100 mil raise, and I had no clue what I was doing, sort of thing.
Yeah.
But it was the kind of place where they would back you if you could bring in the results and you had the ambition to do it. So I got very lucky a lot of stages in my career through having that space to operate and um, have that responsibility. So yeah, I'll put it those three things: good people, entrepreneurial place, and you get a lot of responsibility pretty quickly because of the lean teams as well.
Speaking a little bit more specifically about the promotions that you've experienced at Stifel, would you
Yeah,
say there's something specifically that I suppose yielded that? Obviously, you mentioned there's quite an entrepreneurial culture, so you must have fitted in quite well with that. But would you say there's anything else that you sort of were actively doing to ensure your success at the organization?
yeah. So I always tell junior guys the same thing of you've got to be able to do your existing role well.
Yeah.
So if you're an analyst, you've got to absolutely smash it there,
Yes.
but you've got to already be doing the next role ahead of you. Once you do that, it's so difficult not to be promoted. So I must have been promoted to VP in like 5 years, which is must have been a record at the
Very
firm or
fast.
something.
Yes.
It was pretty fast, but
Yeah.
what helped me massively is I started running deals quite quickly and then started getting a hang of it. And I got to director because I was starting to have board level relationships of FTSE 250 boards, CEOs, etc., but also helping win business through the door. And I must have been 26, 27 by that point. So you've got to look to the role ahead and
Yeah.
make sure you're doing that, but doing your existing role, if you see what I mean.
Yes, and balancing the role that you're hoping to get into, whilst also ensuring you are, taking on all your current responsibilities. Maybe shifting specifically towards the sector group you're in. So I
Yeah,
noticed, so when you first joined Stifel, obviously you said there are only 30 bankers in London, and I'm
yeah.
right in thinking you were more sector agnostic. Can you maybe speak about how the sectors you focused on, how it transitions from when you first started working there? 'Cause I think I noticed you worked on some tech deals at the start, and how
Yeah.
your coverage has changed.
Yeah. So I was the generalist when I joined, and you can imagine there's only 30 bankers, so you're going to do everything.
Yes.
I was doing healthcare, tech, natural resources, fig. I tried everything.
Yeah.
Um, so that was quite cool because you learn a lot very quickly, and we're on so
Yeah.
much deal flow. Kind of, it was a bit of a whirlwind.
Yes.
But then I worked on a lot of real estate deals and bits of funds as well, and then just naturally ended up focusing on it because I quite liked it. And then I got embedded with those clients. So you meet the board of directors enough times or the CEOs, you get to know them well, and they like you, and if you like the team, it just kind of happened naturally.
I think
Yeah,
starting out sector agnostic, as you say, does allow you to sort of work out where your skill set lies and
yeah.
potentially the sorts of individuals that you kind of get along with and you're forming relationships with. And of course, as you become more
Hmm.
senior, it's all about bringing in business and stuff like that. So it sounds like a very kind of a very natural progression. Can you go into the sort of transactions you're working on? Am I right in thinking Stifel's more ECM focused? Because you mentioned obviously an equity deal you were working on earlier. Can you just talk about the
So
products?
I would say 5 years ago, I'd say yes, I agree with you.
Yeah.
I'd say today 75% is M&A
Okay.
or 80%.
Yeah.
Majority of the banks flipped effectively
Yeah.
in terms of its focus, and myself included, funny enough. If you asked me 3 years ago what was your main focus, it would have been ECM broking. I was doing 4 or 5 deals a year, raising money. Last 3 years, all I've done is public M&A. That's all I've done. So it's you kind of change with the market conditions, but also just uh where things have been going.
Okay, that's interesting to hear. So over the last decade at Stifel, which is a particular transaction that's really sort of stood out as kind of, I suppose, a landmark deal or one that maybe you're particularly proud of.
Yeah, landmark's probably grandizing it a little bit, but let's call it a two. It was a 2 billion quid merger of a business called Secure Income REIT and LXI. I was advising on the sell side for Secure Income REIT. What it basically does is it's a real estate company that has long inflation-linked lease structures in place, with the assets like Alton Towers, Thorpe Park, Manchester Arena. So quite trophy assets in there, and quite an eclectic mix. Uh, the reason why I'm mentioning it is we consummated the deal basically in a month, which is
Wow.
quite quite an ambitious timeline.
Yes.
Normal public deals, you do them in 2 to 3 in terms of run up because there's always stuff that goes wrong or whatever. This was done in a month, sort of thing. So we worked pretty hard, as you can kind of imagine.
Wow. Yeah, I was going to say, and was there kind of any particular reason why the process went so fast or?
I think it was just both boards wanted to go get it done, and we got it done, sort of thing. And the thing is, like, don't get me wrong, real estate's not exactly super complicated. So these businesses aren't super complicated. You just
Yeah.
need to make sure the DD's done properly, and from a regulatory perspective, you're all over it. But yeah, I think it was throwing enough people at it to get it done was kind of key.
And then maybe looking at the sector a little bit more broadly.
Hmm.
Obviously, there are probably two sides of it, so real estate and then investment funds. Would you say there are any sort of big market trends that have maybe been impacting your sector over the past year? Of course, we've spoken already about
Yeah.
maybe ECM versus M&A deal flow, especially in London. But would you say there's anything else sort of been a big player?
Yeah. So, like, there's consolidation, there's probably too much supply um, of companies in the market that are a bit subscale. So that naturally means there's going to have to be mergers and take privates. It's
Yeah.
normal. But then because you're working with hard assets, the rate moves from 0 to 5 have really hit those asset values. You guys know, you do a DCF and you move risk-free up, but it's going to impact your asset value. It That's what happened. So a lot of people lost quite a bit of money off holding those kinds of levered assets as a result. And it's happened in the private equity and private market space as well. It's just taken a bit longer there versus the public markets, which adjust very quickly.
Yeah, no, that's really, really interesting to hear. And then maybe now just moving towards a little bit of a reflection. Obviously, you've had an incredibly successful career over the past 10 years. If you were graduating today, how do you think you would approach breaking into the industry? Is there anything you think you'd do slightly differently?
Yeah, so I think internships are still the best way.
Yeah.
Experience and also trying out, and then thirdly, you can potentially get an offer off the back of it too. So
Yes.
I think they're great. It's not permanent as well, which is brilliant. So I'd focus on internships. I'd probably focus on the mid markets personally. And then if you want to move to a bulge bracket, you can do that later in your career. And because you've built such a good skill set, you're actually going to do very well in those bulge brackets because you've
Yes.
come from a brand which is not the same. So you've built a great skill set, which is broad, and you can leverage off their brand if you wanted to do that. So it gives you that optionality. So yeah, that's what I'd probably do. And I'd probably still, if you're not from a target uni, pick up the phone. I can tell you right
Yes.
now. I hope I don't get a shit ton of phone calls straight after this.
Okay.
But genuinely, I can't think of anyone who's given me a call or given anyone senior across the desk a call to pitch.
Wow, yeah, no, that's really, really great advice there. And especially I think the thing you were saying about mid markets,
Yeah,
it sounds like because you were saying in terms of getting those progressions, to become more senior, they almost want you doing things that are expected kind of later on down the line, and the mid
yeah.
markets will give you the opportunity to sort of, build those skills. But that's really, really great advice there. But thank you so, so much for coming on, Raj. I think it's especially been useful to our members, opening their eyes to the benefits of being somewhere more mid market in terms of career progression. And so it's been really, really fascinating speaking. Thanks so much for your time.
Cool. Thanks for your time.